61 years old, $1.4 million saved. So the inspiration for this video is from a couple that I recently met with in our office. And again, they're both 61, hardworking, disciplined. We'll call them smart investors, and they've done very well. They've saved that $1.4 million for retirement. And now, obviously, most people would look at that number and they'd say, great, you've made it. And in many ways they have. But here's what made that conversation interesting. When we looked under the surface, the $1.4 million wasn't one simple bucket of money, okay? Almost $1.1 million of it was in traditional IRAs and old 401ks, which is pre-tax money, okay? Which also means there's a silent partner in that account, and that silent partner is the IRS, right? Every dollar they withdraw will be taxed as ordinary income, okay? And when required minimum distributions start, for them it will be age 75, they won't have full control over how much comes out every year. The government will actually decide the minimum distribution, and that's where things start to shift. Because on paper, $1.4 million feels like security, but structurally it can create, I'm going to call it tax acceleration, and no one wants that. Right now, they're planning to retire at 62, so next year, right? That gives them about 14 years before those required minimum distributions begin. And those 14 years might actually be the lowest tax years of their adult lives. No employment income, Social Security not yet turned on, no forced distribution, and that window matters because if they simply, we'll call it let it ride, the IRA continues growing, and by 75, RMDs, or those required minimum distributions, could push them into a higher tax bracket than they expected, okay? And that's if tax brackets don't change. We don't know where they're going to go. That could also increase their Medicare premiums. And eventually, if one spouse passes away, which statistically will happen, the surviving spouse will have to file as single. And that's when we'll call it the real compression begins. Same income, right? Now it's all going to one person, higher tax rates. And that's what we call the widow's tax shift or the widow's tax. And most couples never see this modeled. So here's the key point. The risk for the couple isn't running out of money. At $1.4 million for them, with moderate spending and little debt, they're likely fine, okay? The risk is inefficiency because $1 million in a Roth IRA is very different than $1 million in a traditional IRA. $1 million in a taxable brokerage account behaves differently than $1 million in a 401k. So the statement balance tells one story, the tax structure tells another. And when we ran the numbers for them, the difference between a coordinated distribution strategy and a passive take it as we need it approach was significant. Over their lifetime, it could mean hundreds of thousands of dollars in additional taxes paid. And again, not because they made bad decisions, but because no one had engineered the distribution phase. And that's the shift that happens once you cross, I'll call it the $1 million mark, or in this case, $1.4 million. We're not usually playing the accumulation game anymore. We are now playing the optimization game. And it's not about earning more, it's about keeping more. It's about sequencing withdrawals intelligently. When do we take it out? And it's about when to turn on Social Security, okay? And potentially using those early retirement years to reposition assets strategically, okay? So we're going to coordinate the investments. You want to focus on tax planning, income timing, and the estate structure all is one system. Not separate conversations, those all tied together. Because here's the truth. Most successful savers are excellent at accumulation and saving. Very few people ever help them engineer decumulation, okay? And the financial impact over that 20 to 30 years, it is dramatic. I've seen it 1,000 times. When this couple left our office, they didn't feel scared. They felt relieved because now the $1.4 million wasn't just a number. It was part of a plan after they left. And this actually took a couple meetings, but it had structure, it had timing, it was intentional. And that's the difference. If you're over 55 and you've saved over $1 million, or in this case, again, $1.4 million or more First of all, congratulations. It's a tremendous accomplishment to chip away and save money that way. But the next question is not, did I save enough? The next question should be, is it structured correctly? Because at this stage, the greatest risk isn't market volatility. It isn't even longevity. It's the silent tax drag, we'll call it, or uncoordinated withdrawals. It's missing the window of opportunity between retirement and that RMD age that we talked about. So the $1 million milestone, or 1.4 million, is not the finish line. It's where intelligent retirement planning actually begins. Make it a great day.
Thank you for listening to the Great Wealth Transfer Podcast. If this podcast resonates with you, reach out to 6 Point Financial Partners at 585-485-6048 or email dpaulsini@sixpointfp.com.
Content here is for illustrative purposes and general information only. It is not legal, tax, or individualized financial advice, nor is it a recommendation to buy, sell, or hold any specific security or engage in any specific trading strategy. All investing involves risk, including loss of principal. Results will vary. Past performance is no indication of future results or success. Market conditions change continuously. Information here is provided in part by third-party sources. These sources are generally deemed to be reliable. However, neither 6 Point Financial Partners, Private Client Services, nor RFG Advisory guarantee the accuracy of third-party sources. The views expressed here are those of 6 Point Financial Partners. They do not necessarily represent those of Private Client Services, RFG Advisory, their employees, or their clients. This commentary should not be regarded as a description of advisory services provided by 6 Point Financial Partners or RFG Advisory, or performance returns of any client. The views reflected in the commentary are subject to change at any time without notice. Securities offered by registered representatives through Private Client Services. Member FINRA SIPC. Advisory services offered by investment advisory representatives of RFG Advisory LLC, RFG Advisory, or RFG, a registered investment advisor. Private Client Services, 6 Point Financial Partners, and RFG Advisory are unaffiliated entities. Advisory services are only offered to clients or prospective clients where RFG Advisory and its representatives are properly licensed or exempt from licensure. No advisory services may be rendered by RFG Advisory unless a client agreement is in place.